Hey, welcome back to this month's market update, to where we are going to share with you some wonderful information about interest rates. What are they doing? What the uh, inventory levels are doing, and some facts that will actually surprise you of just really knowing what's going on with the market. So let's dive in right now and discuss the interest rates on this month's update here. So let's go ahead and check this out, because you guys can see that the mortgage interest rates since November have slowly been declining in a declining down arrow. Yes, the last week they've been kind of trickled up a little bit, but we're seeing this consistent down where people are actually getting a little bit more excited. You can see a lot more buyers coming on the fence. There's been over a 17% increase on refis and stuff going on right now in the market, because all the people that maybe purchased somewhere in here are now being able to refi and get a less interest rate on that. So I want to share with this is that I wonder if some consumers have worked through the 5 stages of grief of higher mortgage rates. And that was with Ali Wolf, a chief economist. So we're kind of like looking at this as that, yes, the interest rates spike so quickly, so fast, that people were kind of in this like stages of grief, like, wow, is it going to stop? Is it going to go way high, and kind of that nature. So let me just share what's happening here in the 30-year fixed rate mortgage news, that this actually demonstrates really nicely of what this is. So with the panic mode is that when we were in a weak buyer demand, when we really got up to like 7%, it pretty much put a little bit of a slight halt to the buyers coming in the market. And they wanted to kind of see what was kind of happening, what was going to go on. And now that things have kind of settled down, and understanding that, hey, it's just going to cost more. Interest rates are still way lower than they were years and years ago. So this kind of illustrates it nicely, that we are in this limited buyer demand when they were in the 7, 6.5, and then it kind of dipped down in here into the low sixes. And so a strong buyer demand. So we are still in a very healthy market of what's kind of happening when we stay in this green area. Kind of a nice opportunity for a buyer and the seller, without multiple offers going on and brewing, to be able to actually come to an agreement on a price that is fair for both buyer and seller. And so I want to share with us a little bit about this, that I had a lender actually send this to me the other day, that basically, if you took, because I will tell you right now with the inventory, there are some prices out there and some properties that you could not have touched last year. I've seen some properties that are coming on the market that are $100,000 to $75,000 less than maybe they possibly would have just tested the market last year to see if they would sell. So she actually brought this to my attention, that if you were actually to have, let's say, a $450,000 house with $40,000 down, a year ago, the average rate in the country was about 4.125. And today, the average rate was about 6.5. So when you look at those rates, if you got paid $100,000 less, or got a house $100,000 less than last year, which I have seen buyers getting, that's only a $48 a month more in a house payment. So don't be afraid to say, well, the interest rates are still too high, I want to kind of sit on the fence. There it is. Go out and look for that diamond in the rough of the house that actually is priced well, and not the sellers that are just flirting with the market and seeing what they might be able to get. So guys, it's still a great time to buy. There's still great buyer demand. When we got into this range right here, I could almost tell you the phones started ringing and buyers were kind of coming back way quicker than they were when they were up here for about maybe 3 to 4 weeks. So let's share with this here what we kind of got going on the inventory aspect of this. And this was real interesting, because when people, the economists and people in the media and the news, they thought, hey, the market's just going to crash, the market prices are just going to go down, because you could see this nice inventory spike right here last year, where they thought that the spike was going to continue going up. And if we just oversupplied the demand of real estate and the demand of all these homes, and then they're oversupplying the market, that the market might do a crash and come down. But if you look at this, what basically happened here, it didn't take this. It didn't do that. And then the inventory actually went way low. So historically, we are lower than we were on all these other years on current inventory that's out there. So the inventory that's there is fantastic opportunity for a buyer to come in and have choices for them to be able to purchase. So this actually has allowed the demand and the prices, where the prices didn't like all of a sudden completely crash because there was such lower inventory. The demand of those properties still was on a medium to high level. So that was kind of a fun little statistic to look at there as well. And you can see here that new listings below the previous years of where they're kind of happening, we're still way below on some of these other years that we actually had on the listings that are coming on when you compare January to January. I love this on Mike Simonson. It says, I'm looking at the latest housing data and I see a surprising demand indicates including home prices, resiliency, and supply staying restricted. Who would have guessed that? So I like that one too. This is interesting too. Watch what's happening. I've been sharing with you guys that the economists and these big banks and these different individual people were saying, hey, the market might be kind of dipping. The prices are kind of going down. Well, here's January 10th that the Goldman Sachs said that they felt that the market and the depreciation for the year of 2023 was going to go down about 6%. Well, look what they just did. A few weeks later, they corrected it and said, you know what, maybe it's only going to go down maybe negative 2.6, percent. And again, these are countrywide. Each area is a little bit different. Some things appreciate a little bit higher in certain counties and cities and states, and certain things didn't. So we kind of feel, and listening to all this news, that we're going to be kind of this medium, kind of a flat kind of market, kind of trickling through because the inventory is still low. But I can tell you that I feel that it's actually picking back up because I'm getting a lot of phone calls from sellers wanting to get back into the market coming up this spring. So you can kind of look at this of the home values hit bottom. And these are some big people here that we can kind of follow, and you can kind of see what they did. It looks like it kind of peaked on, these are depreciation numbers back in August and July. And you can see they're a lot less than they used to be. So that peak of that depreciation might have been back in the August, September months. And now you can see that people are not, the depreciation or the lowering of housing prices are not happening as much as they were before. So I like that. So you can kind of get that little feel there. So thank you. That takes care of the rates and the inventory. So let's talk about news. Guys, be positive. I know that sometimes that things are just as how it's actually packaged. Look at the whole entire story, what's happening, because the headlines do more than terrify than they clarify. So let me share an example with this. Do you know that if you surveyed all Americans, say that housing market's going to crash in a minute in the next 3 years? 67% of the American population feels that there's going to be this crash in the market. And maybe why that is because look at these articles. U.S. foreclosure filings surged 115% in 2022. U.S. foreclosures activities doubled annually, but still below the pre-pandemic levels. Foreclosures filings rose 115% in the past year. With all this negative news, you would understand why the average consumer feels like we're about to have this bubble or this complete crash in the real estate market. But let me tell you what this, a system that we actually follow really closely is Tom, a leader current curator of the real estate data nationwide for land and property data, today released the year-end 2020 U.S. foreclosure market report, which shows foreclosure filings, default notices, and scheduled auctions and bank repossessions were reported on the 324,000 U.S. properties in 2022. So yes, it was up 115% from 2021, but down. They don't tell you this part, but it was still down 34% from pre-pandemic levels of 2019. Before the pandemic shook up the market, foreclosure filings in 2022 were also down 89% from a peak of nearly 2.9 million in 2010. So let's look at this chart, guys. You can see back here when the market completely crashed in 2008 through 2010, we had 2.9 million people unfortunately had to file foreclosure. Now, we don't want people to file foreclosure, and our company has something to help you out. And you can actually check in with me if you feel like that you are headed that direction or behind in payments. Call me and I'll be able to share a new program that we just launched to help you get out of that foreclosure. So you can actually see right here that, look at this right here, that in 2021, yes, we had this huge spike. It was a huge spike, but you also have to realize in the next slide that there was forbearance kind of going on. So people actually were kind of protected from the foreclosure. But even if we actually had 324, we are so far below what we actually kind of came through here on this market. And there's just more equity in people's homes. So let's talk about that. So this is kind of a blown up sheet and, kind of chart from that. So you had 1 million fewer foreclosures over the last 3 years. And you can see right here that you had some, this is how much short we were here and there. And so this is a lot more foreclosures that were and able to not go on this kind of this average that we've been basically having. And so you can take a look at this one here, that 18 months after the end of the government's foreclosure moratorium, then less than 5% of the 8.4 million borrowers who entered the CARES Act forbearance program remaining, foreclosure activity remains significantly lower than it was prior to the COVID-19 pandemic. It seems clear that the government and the mortgage industry efforts during the pandemic, coupled with strong economy, have helped prevent millions of unnecessary foreclosures. And that was awesome to be able to see that. So guys, that was kind of a nice statistic there. The bottom line there is we will have an increase in foreclosures over the next year from a record low levels, but there will not be a huge wave of distressed sales as it happened following the housing bubble. The distressed sales during the housing bust led to a cascading price declines, and that will not happen this time, says Bill McBride, the founder of Calculated Risk. So guys, that's where we need to be. We need to control the narrative. We need to be positive. We need to get out there and work and be able to help people and buyers and sellers to be able to sell, but we need to understand kind of the facts of what's kind of going on. So don't just look at the small headlines, look what is also behind the headlines, and look to kind of talk to your real estate professional and say, how's the market out there? And they will be able to tell you where it's at, because right now this is a fantastic start for me for the real estate of 2023. It's been great. A lot of sales, a lot of buyers, a lot of new listings coming on the market, and a lot of great buys, because the sellers understand that the market with the interest rates being a little bit higher, they need to be more aggressive on pricing their property to help that buyer to be able to have the affordability to be able to make that happen. So guys, thank you so much for listening. Please subscribe, check things out. Happy to help. Give me a call and we'll talk to you soon. Take care.